Are you still optimistic on stocks heading into this year?
So we are, Romaine, at least through the end of the year, we do see markets moving higher. However, we expect some volatility here, and we expect some choppiness throughout the year as markets really recalibrate not only to new policies, but also to really a new policy style. President-elect Trump has a more escalatory to de-escalate strategy, a more disruptive type style, and markets need to re-assimilate to that. So we think that does add to volatility here, and that's probably an opportunity for investors.
Well, where is that opportunity? Is that broad market opportunity, or are we talking sector opportunity, or even just single stock opportunity?
Yeah, so I say, in terms of broad market, it's U.S. over international, and then within U.S., we like large caps, and we especially like the more cyclical areas of the market. So industrials, financials, energy, communication services all look attractive here to us as we see the U.S. economy growing at about 2.5% this year.
But at the same time, there's a lot of catalysts that we should be aware of in coming days. CPI, for instance, in 5 days, event risk, really. So what's a good entry point for those who want to get invested in equities but are feeling a little bit shy given how volatile things are at the moment?
Sure. So, 2024 was a very unusual year in that we only had 2 downturns in excess of 5%, and we never hit a 10% correction. We typically see a 10% correction within a 12-month period. So if we were to see that 10% correction, we think that's a good opportunity for investors to start dollar cost averaging into equities at that point.
If the 10-year yield gets to 5%, can stocks still do well in that scenario?
So 5% probably so, but if we get much beyond 5%, then we think that's going to cause investors to reassess the valuations that we have on stocks right now. As you know, the PE multiples are very rich, and that is somewhat justified by the composition of the index and the growth rates that we've seen. Yeah. However, if we have to discount at more than 5%, then that starts to bring that valuation into question.
Just a real quick question. Only have about a minute left, Tracie, but I do have to ask you about the moves that we're seeing today in the commodities space on the back of concern about the incoming president in the U.S. and potential interplay of sanctions. Brent crude up at $80, WTI at 76, 77 bucks a barrel. Is that an investment opportunity as well?
So we think so. We see supply being constrained in the coming year, whether that's from OPEC Plus continuing to constrain supply on their side, or whether it's U.S. companies remaining disciplined. We do think that oil could reach $85 to $95 per barrel by the end of the year. And for some time, we have also favored precious metals. And we think that precious metals also are a good hedge to event risk and to inflation risk.
All right. Well, certainly those are the bright spots today in the broader market. Tracie, I have to leave it there. Tracie McMillion, head of global asset allocation strategy at the Wells Fargo Investment Institute.